China finance giants miss payment alarm regulators. Now, one of China's largest private wealth management has triggered fresh anxiety about the wealth of the country's shadow banking industry after missing payment on multiple high-yield investment products. The turmoil at Zhongzhi Enterprise Group Co., a secretive financial conglomerate that manages about 1 trillion yuan, approximately $138 billion, surged to the fore after several of its corporate clients disclosed overdue payment by a trust unit. In a sign the Chinese authorities are worried about potential contagion, the banking regulators has set up a task force to examine risk at Zhongzhi, according to people familiar with the matter. Now, while later known outside China, Zhongzhi is among the biggest players in the country's $2.9 trillion trust industry, which combines characteristics of commercial and investment banking, private equity, and wealth management. Firms in the sector pool savings from wealthy households and corporate clients to offer loans and invest in real estate, stocks, bonds, and commodities. Chinese trusts have been under pressure for years after regulators began clamping down on the nation's shadow banking excesses in 2017, but Zhongzhi's difficulties have emerged at a particularly sensitive time for investors, many of whom are already worried about the state of the world's second-largest economy and its property market. One of the nation's largest developer, Country Garden Holdings Co., is on the brink of default, while loans extended by Chinese banks fell to the lowest level since 2009 last month in a sign of waning demand from businesses and consumers. Zhongzhi's trust unit bought stakes in real estate project last year, betting on the market rebound that has so far failed to materialize. Why missed payment of China trust firm jolted market? Well, the confluence of risk in is adding pressure on Xi Jinping's government to shore up investor confidence. Chinese stocks slumped on Monday, with the CSI 300 index failing for the fifth time in 6 sessions, and the yuan depreciated towards its weakest level this year. While market took some solace from news of the Zhongzhi's task force, analysts at JP Chase & Co. warned that the turmoil may contribute to a vicious cycle for real estate financing in China. The biggest problem now is how to isolate the risk associated with Zhongzhi Group so that it doesn't cause confidence of the entire trust industry to collapse, said Shen Meng, a director with Beijing-based Chancellor & Co. In court, if the situation continues to worsen, expect the scale of the risk to be no less than when a leading property developer defaults. Now, a total of 106 trust products worth 44 billion yuan defaulted this year through July 31, according to data provider Use Trust. Real estate investment accounted for 74% by value. 3 firms said last Friday they failed to receive payment on product issued by companies linked to Zhongzhi, including Zhongrong International Trust. Beijing-based Zhongzhi was founded in 1995 by Xi Jinping, who built the firm into a sprawling empire. Xi died of a heart attack in 2021, just as COVID-19 pandemic's lockdown slowed China's economy and increased volatility in its capital market. While its replacement, Liu Yang, vowed to keep the company's strategic focus on industrial and asset management businesses unchanged, the economic slowdown and the property market slump have weighed on its operations. Zhongzhi is the second largest shareholder of Zhongrong Trust, with its ownership at around 33%. The conglomerate also holds stakes in 5 other licensed financial firms, including a mutual fund manager and 2 issuers, and invests in 5 asset management companies and 4 wealth units, according to its website. It also controls listed companies and owns 4.5 billion tons of coal reserve amongst its industrial operations. Zhongrong Trust alone has 270 products, totaling 39.5 billion yuan due this year, Use Trust data showed. Now, the average yield on those products amounted to 6.88% compared with the benchmark 1.5% one-year deposit rate paid by banks. The trust company has disclosed little to the public about the situation, though it has said it's aware of forged letters being shared on social media saying the company is no longer able to operate. The firm has reported them to authorities, according to a statement on its website. In one unverified letter being circulated on social media, a wealth manager at Zhongzhi apologized to his clients, saying the group's world arms have decided to delay payment on our products since mid-July. The incident involves more than 150,000 investors with outstanding investment totaling 230 billion yuan, according to the letter. Now, the prolonged slump in China's property sector has brought previously sound property developers to their knees. The sector is caught in a vicious cycle where failing developers put home buyers off purchases, which then crimps cash flow of companies. Home sales tumbled and at the most this year in July. The missed payments show how the real estate's liquidity problem can create a domino effect on other sectors, including the trust industry, said Gary, senior economist at Natixis. It would not be surprising to see more trusts with a high asset allocation towards real estate face payment issues. The National Financial Regulatory Administration, Zhongzhi Trust, and its president, Zhongzhi Group, didn't respond to requests seeking comment. Nasty Property Service Co. and KBC Corp. first announced news of the delayed payment by Zhongzhi International Trust in a statement Friday evening. KBC, a carbon product manufacturer, said in a statement to the Shanghai Stock Exchange that the delayed payment were tied to 60 million yuan invested with Zhongzhi Trust. Another listed company said on Friday that payment on one wealth product it bought from a Zhongzhi unit has become overdue this month, and it would take legal measures to recover investment losses. Zhongzhi Trust, which managed 786 billion yuan in assets as of December 31, said its businesses faced a relatively high level of credit risk in 2022 as counterparties' liquidity pressure and refinancing difficulties eroded the ability to honor payments, according to its annual report for the year. Real estate accounted for 11% of Zhongzhi Trust assets, following 42% in industries and 33% in financial institutions, according to its annual report. The company was previously fined 200,000 yuan by regulators for investing in a property project that lacked relevant approval and pledged to improve compliances. Trust firms, including Zhongzhi Trust and Min Metals Trust Co., have bought stakes in at least 10 real estate managed projects last year, betting that unfinished homes will eventually yield cash to pay off some of the $230 billion in property-backed funds they have issued to investors. China's benchmark CSI 300 index fell 0.7% on Monday, while the Hang Seng China Enterprise Index of shares in Hong Kong lost 1.6%. The yuan weakened 0.2% against the dollar.